A very good morning to all of you. This is the third session of MMPC 004 on the title Accounting for Managers. Friends, till April 23rd, we have covered the following topics: Introduction to Accounting, Preparation of Books of Accounting, Financial Statements, Preparation of Financial Accounts of Companies, and Cash Flow Statement. Friends, today we are going to start with block 2 on the title Cost Accounting. We are going to cover unit number 6 on understanding and classifying cost, unit number 7 absorption and marginal costing, and unit number 8 on activity based costing. Friends, once we are through with the definition of costing, we'll be able to get the major information about why and how this has become an important subject over a period of time. Friends, in the initial stage, cost accounting was merely considered to be a technique for ascertainment of cost of product or services on the basis of historical data. But in the course of time, it was realized that due to the competitive nature of the market, their planning, that ascertainment of cost was not as important as controlling cost was. Therefore, the cost accounting is considered more a technique for cost control than merely for cost ascertainment. Earlier, we were thinking that once we are in know of the cost of a product, we'll be able to just sell it at a comfortable margin. But now, it had extended its span by saying so that now it is applicable for the cost control as well, which is very, very important on the concurrent business activities. Moreover, due to technological development in all fields, cost reduction has now come within the ambit of cost accounting. See, cost control is one such aspect where you can just have the discipline, but cost reduction is really a technical issue. How to reduce the cost? What are the parameters where you can just take up the job more efficiently so that you can reduce the cost in the subsequent procedure? Friends, cost accounting is thus concerned with the following: ascertaining cost, controlling cost, and reducing cost. So the sphere has come out to be in a wider spectrum, not merely ascertaining the cost, but with the controlling and reducing cost as well. Friends, once we are just in know of the definition of the cost, the concern of the cost accounting, we have to know about what are the elements of cost. Now, in order to understand the correct interpretation of the term cost, it will be appropriate for us to learn about the basic element of cost. What are those basic elements? These are 3 basic elements. The first one is material. Once we talk about the material, it is a substance for which the product is made, known as material. All right. It may be in a raw or a manufactured state. You may be purchasing the work in progress as well. There are certain manufactured product which you are buying and then assembling them. Could also be one of the cost for the product to be sold. It can be direct as well as indirect material. We will discuss at a later stage. The first one is direct material. When we are just talking about all the material that becomes the integral part of the finished product can be conveniently assigned to a specific physical unit is termed as direct material. Now, it could be the raw material. It could be coming out to be the manufactured state units as well, which is leading to a particular unit, specified physical unit is termed as direct material. The indirect material, which is a supportive one, but very important to manufacture a product. Therefore, all material that is used for the purposes ancillary to the business and which cannot conveniently be assigned to this specific physical unit. You see, if we are just talking about the indirect material, it could be consumable stores, oil, printing and stationery material, etc. They are not constituting the part of the product, yet they are important because they are helping a lot to see the final manufactured product of a factory. So therefore, this material is also constituting a vital role at the time of preparing the cost sheet, which we are going to discuss in a short while now. Second component, second element is labor. So when we talk about labor, that means the human resource is being involved. For the conversion of material into finished goods, human effort is needed. It could be skilled, it could be unskilled labor as well. Such human effort is called labor. Labor can be direct as well as indirect. Now, what could be the direct labor? Labor that takes an active and direct part in the production of a particular commodity is called direct labor. Direct labor costs are therefore specifically and conveniently. Now, these two terms are very important. Specifically and conveniently traceable to specific product. Now, if we just happen to know who is working on a specified machine, who is working with what raw material can easily be identified, specifically and conveniently also traceable. Whereas the indirect labor, there are some more people who are not in the manufacturing process directly, yet they are important for seeing the final product of the raw material. So the labor employed for the purpose of carrying but task incidental to goods produced or services provided is indirect labor. Such labor does not alter the construction. They are not in the construction or composition or condition of the product. Moreover, it cannot be practically traced to specific unit of output. You cannot just apply them to a particular product. No. Wages of storekeeper, the raw material, they may be having n number of items in the store, but then the wages of storekeeper is an indirect labor because they are not working directly in the manufacturing or construction process. Foreman, the one who is just looking as a supervisor, they are again not in the direct process of constructing or manufacturing. Timekeepers, those who are just looking at the time control. The director overseeing all those operations. Salaries of salesmen are the example of indirect labor cost. They are people who are working for the execution of other jobs which are just taking the shape of the final product and then it's selling as well. Expenses. Friends, whenever we are just talking about the material and then labor, the third part, which we are later going to call it as overheads, the expenses. There are certain direct expenses related to the manufacturing or related to the construction are called direct expenses. So these are expenses that can be directly, conveniently, and wholly allocated to specific cost center or cost units. Suppose we are just constructing a particular building where we are needing a specialized machinery for a particular contract. Suppose we are having cost of defective work incurred in connection with a particular job or contracted. So all these things are direct expenses because specified, wholly allocated, conveniently and directly related to a particular cost center or cost unit. Whereas the indirect expenses, when we just speak about, they are not directly, conveniently, or wholly allocated to cost centers or cost units. Example of such expenses are rent. Rent could be of a building, could be of your store, could be of your godown, lighting of the factory, of the office, insurance charges, overheads. What I told you already, that the expenses we are just going to call it as overheads in due course of time. The term overhead includes indirect material, indirect labor, and indirect expenses. Thus, all indirect costs are overheads. Manufacturing organization can broadly be divided into three divisions. Repeat, a manufacturing organization. The first division is factory or works where production is done. Office and administration where routine as well as policy matters are decided. Selling and distribution where products are sold and finally dispatched to the customers. These are the three stages. Once we are having the manufacturing process. Second process, when we are just packing them up, putting them in the saleable form. And the third, when we are just taking the orders from the prospective customers and then dispatching them the required orders to them. So overheads may be incurred in the factory of or office or selling and distribution divisions. Thus, overheads may be of three types. Factory overheads. We have already discussed. The first stage was factory division or factory unit. They include the indirect material used in the factory, such as lubricants, oil, consumable stores, etc. Friends, this is apart from the direct material, which is needed to see the final shape of the product. Next is indirect labor, when we are just talking about the salary of gatekeeper, timekeeper, and manager of the factory. And the third one is the indirect expenses such as factory rent, factory insurance, and factory lighting. Friends, it has got a vital meaning when we are just talking about the factory overheads. It stops at the factory level only, and the next division starts. Office and administration overheads. Once the product has been manufactured, it goes to the QC, Once it passes the quality control test, you are supposed to make a quality packing and other preparations so that it does not get spoiled. So what we do, they include the indirect material used in the office such as printing and stationery, material, rooms and dusters. Indirect labor such as salaries payable to office manager, office accountant and clerks. Indirect expenses such as rent, insurance, lighting of the office. Okay. So once it has gone to the godown, now we are just preparing it for its sale. So once we are preparing the sale process, the selling and distribution overheads starts. What we include in the selling and distribution overheads? The indirect material used such as packing material, printing and stationery material. I told you once it comes out from the factory, it goes to the office, and then we start preparing for its packing and other safety measures. So it comes under the sales and distribution overheads, which includes the packing material, printing and stationery material over the selling process. The indirect labor such as salary of the salespersons and sales managers are included as selling and distribution overheads. And finally, the indirect expenses such as rent, insurance, advertising, expenses, etc. for the godown and for the sake of selling the product are covered under the selling and distribution overheads. Let us just see now the components of total cost. We have already seen that the direct material we have, then we are just including certain indirect costs at the factory. Then the material comes to the office, we incur certain other expenditure in the office to maintain that particular component, and then we are just putting up for its sale and incurring certain more expenditure to make it as a total cost. So the prime cost, it consists of cost of direct material, direct labor and direct expenses. It is also known as basic, first or flat cost. Nothing less than that. Prime cost, the raw material, the wages of the labor manufacturing that, and the direct expenses related to that raw material are taken in the prime cost. As we have already seen that at the factory level, we are having two parts. One is the prime cost, the other one is factory cost. It comprises of prime cost and in addition, works or factory overheads, which include cost of indirect material, indirect labor, and indirect factory expenses. This cost is also known as works cost because still the manufacturing is going on. The production or manufacturing cost, because once this is completed, it will be going to the office, it will be going for the other process. So then what we do, once we just complete the factory cost, we go for office cost, which comprises factory cost and office and administrative overheads. So office and administration overheads, we are adding that, thereby achieving our total cost of production. This is the total cost of production. It has not yet been sold. It has not been put on sale. Now we have to start the selling process, which comprises the cost of production and selling and distribution overheads, which is constituting as cost of sales. The cost of production and selling and distribution overheads are constituting the cost of sales. Friends, based on these parameters, we are having the cost sheet, where we can just look at direct material, direct labor, direct expenses. These are constituting the prime cost or direct cost or first cost or flat cost. Once we are adding the works overheads in the prime cost, it becomes the works or factory cost or production cost or manufacturing cost. And once the office and administration overheads are added in the works cost, we arrive at the office cost or total cost of production. And finally, once we are adding the selling and distribution overheads in the office cost, we arrive at the cost of sales or total cost. Classification of cost. Cost can be classified into different categories depending upon the purpose for which information is required. The cost can broadly be classified into fixed, variable, semi-variable, and step cost. Let us just understand it one by one. If we just speak about fixed cost, these are the costs that remain constant irrespective of the quantum of output within and up to the capacity that has been built up. Fixed cost sometimes are referred to as period costs. They can further be divided into committed fixed cost and discretionary fixed cost. With regard to committed fixed cost, it consists primarily of those fixed costs that arise from the possession of the plant, equipment, and a basic organizational structure. Whereas the discretionary fixed costs are those which are set at a fixed amount for a specific time period by the management in the budgeting process. It may not be, but it is for a specific time period as desired by the management in the budgeting process. These costs directly reflect top management policies and have no particular relationship with the volume of output. These costs can therefore be reduced or eliminated if the circumstances so require. Variable cost. There is a change now from the fixed cost. As soon as you increase the output, your variable cost will increase. As soon as your output is decreasing, your variable cost would also be decreasing. So these are the costs that vary in the direct proportion to output. They increase or decrease in the same proportion in which the output increases or decreases. The example of such costs are direct material, direct labor, power, etc. Next is semi-variable cost. These are the costs that do vary but not in the direct proportional to output because they are made up of both fixed and variable cost elements such as depreciation, repairs, light, heat, telephone, etc. It may be seen that even if there is no production, the depreciation would go on. The light may be there, heat process may be there, the telephone would keep on working. So these are semi-variable cost. It has no connection in a direct way to the output. Okay, because it does not increase according to the increase in the output. Step cost. Fixed cost in general remain fixed over a range of production activity and then jump to a new level as activity changes. For example, foreman can supervise a given number of workers, say 10. So once we are having 12 or 15 workers, definitely we'll be needing second foreman. And once they are crossing 20, reaching to 25, 28, you will be needing third one. And once they are crossing 30 to a comfortable level, definitely you will be needing the next foreman as well. Likewise, the rental cost of delivery vehicles also follows the same pattern. Because once you are having more output, you will be needing more delivery vehicles. If you are having the lesser output, then the cost of delivery vehicles would be less. Direct and indirect cost. When we are talking about the direct material, indirect material, direct labor, indirect labor, direct expenses, indirect expenses. So thereby, the cost now constitutes the direct cost, which can be directly, conveniently, and wholly traced to a product, service, or job. Examples of such costs are direct material, direct labor, direct expenses. Indirect cost, whereas, would be just coming out, which cannot be directly, conveniently, or wholly identified with a specific product, service, or job. Yet, they are assigned to the product, such as salaries of timekeepers, storekeepers, foremen, printing, and stationery cost. Some other concept of cost. Shutdown cost. A very important scenario which speaks about that even if your factory is temporarily out of order, it may have been shut down on account of some temporary difficulties, shortage of raw material, non-availability of requisite labor force, etc. Still there are certain expenditure would go on. Therefore, this is called the shutdown cost. Whereas the sunk cost is of historical nature, the past cost or the cost incurred as a result of a decision made in the past. Once we are in know of it, that this expenditure we have incurred, but it cannot be reversed or revised by the subsequent decisions. Suppose you have invested in the plant and machinery or in a building. So definitely it is a sunk cost, historical cost, which you have incurred it for the time being, but unless you sell them out, it cannot be reversed or revised by the subsequent decision. Therefore, it is called the sunk cost. There are certain costs which you can control. There are certain costs which you cannot control. How? Because there are certain action which you are taking. So therefore, the cost also could be controlled by you. But if suppose you are in the factory and there is something wrong has happened in the office or in the selling process, that cost cannot be controlled by the factory. Any worker in the factory cannot control such cost. They can control the cost which can be influenced by the action of a specified member of an organization. Okay? So for factory functionaries, the selling and distribution imbalances cannot be controlled. Or if suppose there is any imbalance in the factory, selling and distribution people cannot control that. So the specified action can be influenced, can be controlled by the specified people only. Imputed or hypothetical cost. It do not just outlay any cash, does not involve any cash payment, but we are taking it for the management decisions. We presume certain cost that it might have been happened notionally. Therefore, the imputed or hypothetical cost we are adding to some product, for some services, for some jobs. Differential, incremental or detrimental cost. The difference in total cost between two alternatives is termed as differential cost. Suppose we are having two different alternatives, alternative A and alternative B. Whatever the incremental may be, the difference between the two alternatives would be termed as differential cost. Out-of-pocket cost. Out-of-pocket cost means the present or future cash expenditure regarding certain decision, which may vary depending upon the nature of decision made. Okay? And the opportunity cost refers to the advantage in measurable terms, which can be seen on account of not using the facility in the manner originally planned. Okay? Suppose you had a plan of using any opportunity, any facility, but you have gone for the other process. So whatever cost you get it, that is called the opportunity cost because it is other than the originally planned activity. Traceable, untraceable, joint and conversion cost. Friends, we can always attribute this particular thing about the traceable cost, which is the direct labor and the raw material. These are costs that can be easily identified and traced to a specified product, service, or unit of the company. Untraceable cost. Suppose the salary of a foreman, the salary of timekeeper, the salary of manager of factory. These costs which cannot be identified with a department, process, or product because it is for the whole factory. Joint cost, whenever two or more products are used out of the same raw material or process, the cost of material purchased and the processing cost are called joint cost. And the conversion cost is when you are transforming the direct material into finished products, exclusive of direct material cost, is known as conversion cost, because the raw material is being transformed to the finished product. So therefore we are excluding the direct material cost, and therefore the quantum of the direct labor and direct expenses shall be the, and onwards shall be the conversion cost. Friends, now we are just going for unit number 7, absorption and marginal costing. In the preceding unit, we have familiarized you with the different elements of cost, material, labor, and expenses. These elements of cost can broadly be put into two categories: fixed and variable cost. We are in know of it. The cost of a product or process can be ascertained by any of the following techniques. Now comes the technique when we are just talking about the absorption costing, and the next one is marginal costing. Once we just speak about the absorption costing, it is a technique which is a traditional or full cost method. According to this method, the cost of a product is determined after considering both fixed and variable cost. Both fixed and variable cost. Thus, in case of absorption costing, all costs are identified with the manufactured product. There is a slight difference in the marginal costing. The technique of marginal costing is definitely an improvement over the technique of absorption costing. According to this technique, only the variable costs are considered in calculating the cost of the product, while fixed costs are charged against the revenue of the period. The revenue arising from excess sales over variable cost is technically known as contribution under marginal costing, because then this contribution is inclusive of cost and the profits, if any. Absorption costing and marginal costing differences. Recovery of overheads. Friends, in case of absorption costing, both fixed and variable overheads are charged to production. On the other hand, in marginal costing, only variable overheads are charged to production, while fixed overheads are transferred in full to the profit loss account. Fixed overheads are transferred in full to the profit and loss account. Thus, in case of marginal costing, there is under recovery of overheads, since only variable overheads are charged to production. Valuation of stock. In absorption costing, stock of work in progress and finished goods are valued at work cost and total cost of production respectively. The works cost or cost of production is defined as including the amount of fixed overheads. Whereas in the marginal costing, only variable costs are considered while computing the value of work in progress or finished goods. Thus, the closing stock in marginal costing is undervalued as compared to absorption costing. But this does not result in carrying over the fixed overheads of one period to another, as it happens in absorption costing. Marginal cost. The similar analogy, if you just speak about the marginal cost, the technique of marginal costing is concerned with marginal cost. It is therefore necessary for you to understand the term marginal cost correctly. The Institute of Cost and Management Accountants, London, has defined marginal cost as the amount at any given volume of output by which aggregate costs are changed if the volume of output is increased by 1 unit. The aggregate cost is increased once the total volume of the output is increased by 1 unit even. So the progression comes out in the marginal cost. Segregation of semi-variable cost. This may be done using the following methods: level of output compared to level of expenses method, high-low method, degree of variability method, scatter graph method, and least square method. Friends, a little while ago, we just said that in case we are having the selling price minus variable cost or the marginal cost, we are going to get contribution. So here we are, the contribution is equal to selling price minus variable cost, or is equal to fixed cost less profit. Break-even analysis. Friends, in any business, you always achieve a point when there is the total cost equals the selling price. The total cost equals the selling price. This point is called the break-even analysis. This particular point is called the break-even analysis. Therefore, the term break-even analysis refers to a system of determination of that level of activity where total cost equals total selling price. However, in the broader sense, it refers to that system of analysis that determines the probable profit at any level of activity. The relationship between cost of production, volume of production, profit and sale value is established by break-even analysis. Therefore, we call the analysis as cost volume profit analysis. Cost volume profit analysis. Let us just look at the utility of marginal costing. The marginal costing is helping in determining the value of production. You come to know that, okay, with this much of capacity, how much units you could produce. It also helps in selecting product lines. Which product line is efficient, cost effective, having the cost control so that you could increase the quantum of work on that production line. Helps in deciding whether to produce or procure. Friends, if you are comfortable enough in procuring the final goods, finished goods, or the raw material, it is always given by the marginal costing. Suppose you are incurring N at the production site, whereas you are getting N minus 1 while procuring the product. Better to procure it instead of incurring the expenditure on production. Helps in deciding the method of manufacturing. The earlier point gets justified that whether to continue the manufacturing or to shift it for some time for procurement of finished goods. Helps in deciding whether to shut down or continue. Again, refer to the previous point which speaks about that whether to stop manufacturing and switch over to procurement, or if it is comfortable, if it is having the cost control, let it continue for some more time to oversee the continuation of this. When we are having certain utility, we have certain limitations also of marginal costing, friends. One is difficulty in classification of cost between fixed and variable elements. When we speak about the semi-variable cost, it becomes little difficult to bifurcate them in fixed and variable element. And with marginal cost, it is a difficult application to go for. In all cases, it becomes challenging when we just talk about to apply the marginal costing as one of the procedure. With that, friends, we have already completed our unit number 7 also. Now we are switching over to unit 8, activity-based costing. This is the last unit of block 2. Let us just look at the introductory part. The activity-based costing is a system of costing where costs are first traced to the activities and then to products. This costing system works with an assumption that activities are responsible for the cost that are incurred. Suppose you do not work, what kind of expenditure you will incur? Nothing. If you don't have any HR today, will you be incurring any cost? Precisely yes. But if suppose it is production linked, then no. So the assumption is the activities are responsible for the cost that are incurred. If there is any activity, definitely there will be some kind of cost you are going to incur, or it will be charged. As stated earlier, costs are charged to products based on the individual products use of each activity. Friends, you charge this particular cost to the product only when you find that the activity is concerning the product. If not, you are not going to charge that particular cost to the product. Features of activity-based costing. Friends, we have the modern approach to the allocation of indirect cost. The costs are allocated to each activity, symbolize the resources consumed by the activity. As done in the conventional costing, activity-based costing is not restricted to the allocation of indirect cost to the department. It moves further to identify the individual activity for indirect cost allocation as the lowest unit. Based on consumption, resources are allocated to each activity and then to cost objects. Activity-based costing identifies the activities using activity cost, drivers, and result in a more accurate cost calculation. This approach facilitates easy identification of cost according to activities cost driver. This costing method is suitable if there is more than one product in the manufacturing line. and overhead have a high share in the total cost. It will be very useful if suppose there are more than one product. And this approach creates a straight cause and effect association with various resources. So this is the feature of activity-based costing. Let us just look at the objectives of activity-based costing. To recognize several activities in the process of production, including the activities that add value. To eliminate the non-value adding activities. To put emphasis on the high cost activities. To incorporate activities based on distribution overheads. To help in decision-making process in the identification of a suitable price of product and services. To ensure accurate and precise cost determination of product and services. And finally, to find options to improve the process and reduction of cost. The last but not the least, let us just find out the merits and demerits of activity-based costing. Let us look at the merit part at once. It removes the cross-subsidization issues. It removes the cross-subsidization issues. Therefore, the allocation of the expenditure to the particular activity is of a paramount importance. Deals with complicated process. Though it is a complicated process, but it comes out to be with flying colors, taking all the informations, becoming a natural process which was earlier looking to be complicated one, but gives the process beauty to this problems, objects, and make it smooth. Product customization. There is a famous dictum that if suppose you are having a loss in the flour, you can collect it from sugar price. Imagine product customization. Now you could know about that how much cost the flour would have and how much cost the sugar will have. Now once we are so precise, once we are just dealing with the complicated process, once we are removing the cross-subsidization issues, we are in a position to identify the cost-saving chances. The cost-saving chances. How to save the cost? Because we are in a position to know about the cost of a product precisely. It was looking to be complicated because you have to just deal with the differentiation and the differential cost, yet it removes the cross-subsidization issues and deals with it smoothly. Therefore, you are in a position to know about how much cost you are arriving at for a particular product in the interregnum period. Then there are some merits. Definitely there are certain drawbacks, deficiencies, being pointed out by the experts, because when we are dealing with the complicated processes, there may be certain challenges as well. So the challenges are a complex system. You need a person with a very, very high wisdom. Should be adequately qualified, and one should be attentive enough to look at the processes. Because unless you do that, the complex system would definitely be giving you a setback. Product and process should be fully known. When we are just talking about a person who may be dealing with certain issues, who may be dealing with certain products, who may be dealing with certain processes, should be adequately known about them so that the person could justify to apportion or allocate the cost on different counts. Now, always whenever you are just thinking about a sort of process, though it may be complex one, yet you are just always preparing for their, say, do's and don'ts. And thereby, once you just prepare the do's and don'ts, definitely you can just think a sophisticated system, and you are to rely upon that. You are to rely upon that. If you don't rely, definitely somewhere or the else, you will be finding it out that it may give you a hit. It may give you a hit. So better that first you rely and then you just match it out. Once you are matching the things, you will be in a better position to know about where we are. So once you have the do's and don'ts, you will be in a better position to come up with certain issues, to address them, and then finally resolve them as and when they arise. Increase in indirect cost. If there is a complication, definitely there are certain other action also are needed. When there are other actions needed, definitely you have to just look at whether we are incurring any extra cost in redressal of these systems. If not, it should not be a time consuming factor. It should not become a complication. In the complication, the product and processes are fully known to the person. The person should be adequately qualified. If these parameters are not taken care of, definitely the activity-based costing shall be having a setback and would be going to the other route, which may be serving the extra cost or maybe narrowing the gap between the cost of production, cost of sales, and the sale price. With that, friends, we have completed block 2. In the next session, we are going to take up the block 3. Thank you.